Palm Bay processed 39,187 building permits over the last 25 months. We pulled every single one from the city's IMS portal, March 2024 through March 2026.
And the story those permits tell is pretty clear. The construction boom that reshaped this city, strained the roads, pushed the water and sewer systems, it peaked. And it's been cooling off since.
From the Palm Bayer, May 2024 was the high water mark, 1,882 permits in a single month.
That's a staggering number for a city this size. Nearly 2,000 permits processed in 30 days.
By December 2025, that number had fallen to 1,255, a 33% drop from peak to trough.
And here's the thing. That's not one bad month. If you compare matched 12-month periods, April 2024 through March 2025 produced 19,642 permits. The same window 1 year later, 17,895. That is an 8.9% decline across a full year of data.
11 of 13 comparable months show year-over-year declines. This is not a blip. This is a trend.
So what does that actually mean for the city?
Permit fees, impact fees, the downstream tax revenue from completed construction, all of that follows the permit count. When that number drops, the city's budget feels it.
And Palm Bay's budget is already 80% dependent on residential property taxes. So residential construction slowdown hits harder here than it would in a city with a more diverse tax base.
Which brings us to what's actually being built. Residential building permits fell 14.1% over the analysis period. Single-family new construction peaked at 283 permits in August 2024.
283 new homes permitted in 1 month.
And dropped to 140 by December 2025. Over the full 25 months, 4,774 single-family residential permits were pulled, but the trajectory since August 2024 has been consistently down.
But not everything moved in the same direction. Commercial construction went up 19.1%.
That's a meaningful shift.
It is. When residential building slows but commercial picks up, it usually means one of two things. Either infrastructure and services are catching up to growth that already happened, or developers are looking at the residents who are already here and saying, these people need places to shop, places to eat, places to work.
Palm Bay has needed that commercial investment for a long time. One commercial property can generate the same city tax revenue as 6 new homes, with no school seats required and less demand on city services.
And plumbing permits surged 51.5%. That's a renovation signal. When you can't build new, you fix what you have, existing homeowners investing in their properties.
Now let's talk about the builders, because the rankings shifted significantly during this period.
This is where it gets interesting.
Lennar leads with 724 permits over 25 months. That's a 15.1% share of the single-family residential market. They gained roughly 5 percentage points during the analysis window.
5 points of market share in a declining market. That means they're not just holding, they're actively taking share from builders who are pulling back.
And the biggest pullback is Holiday Builders. They held about 12% market share at the start of the period. By the end, roughly 5%.
That is not a rounding error. You go from 12 to 5, that's a company making a strategic decision about Palm Bay. They're not just building fewer homes because the market is slow. They're redirecting resources somewhere else.
Meanwhile, Christopher Allen Homes went the opposite direction. They tripled their permit output during the same window.
Tripled in a contracting market. That's a company that looked at the same data every other builder sees and made the opposite bet. They're saying Palm Bay still has a future worth building for.
The divergence between those three tells you something. Lennar growing, Holiday retreating, Christopher Allen surging. The market is consolidating around fewer builders, and they don't all agree on what's coming next.
Where is the building actually happening? Because Palm Bay is huge. What's happening in the southeast is a completely different story from the northeast.
Southeast Palm Bay accounts for 35% of all permits issued over the 25-month period.
That concentration reflects where the developable land is, where the infrastructure has been extended, and where the large planned communities are still building out. Malabar Springs, Emerald Lakes, that whole corridor.
Northeast Palm Bay shows the steepest decline of any quadrant, down 11.8% year over year. The NE has historically been the older, more built-out part of the city. Fewer new lots, fewer new permits.
So if you live in the northeast, the slowdown is more pronounced. If you're in the southeast, construction is still relatively active, even as the overall pace moderates. Same city, different experiences depending on your neighborhood.
Now here's the question everyone asks. The LDC.
Ordinance 2024-33, the Land Development Code rewrite, adopted September 2024.
After that adoption, monthly permit averages ran about 13.5% lower than before.
Okay, but that's where you have to be careful. That's a correlation. The LDC rewrite added new requirements that could slow the pipeline from plan submission to permit issuance. New review steps, new standards, longer processing times.
And the construction market also softened nationally during this period. High interest rates, cooling demand.
Both explanations fit the timeline perfectly. That's the problem. You can't look at this data and say the LDC caused the decline. You also can't look at this data and say it didn't. Both forces were pulling in the same direction at the same time.
The data cannot separate them.
What it can do is tell you what the approval pipeline looks like. And that's where it gets more optimistic.
Pre-application meetings are running at 219 over the analysis period. No meaningful decline. The city is averaging 41 new approvals per month.
That matters a lot, because the approval pipeline is the step before a permit gets issued. If developers had given up on Palm Bay, you'd see that number crater. It hasn't.
They're still in the queue.
They're still in the queue. They just haven't pulled permits yet, which could mean the LDC is adding processing time, or it could mean builders are timing their starts for when rates come down, or both.
Of the 39,187 permits we analyzed, 42.6% have reached final status. Work complete, inspected. Another 3.1% were withdrawn. 1.3% expired without completion.
So only 4.4% of permits were abandoned. The rest actually resulted in real construction. That's a healthy pipeline. Permits that get pulled in Palm Bay get built.
The remaining 53% are still active, issued and awaiting inspection, under review, in progress.
So where does this leave us?
March 2026 came in at 1,689 permits, only 2.8% below the same month in 2025. It's a single month. It doesn't establish a trend.
But it's the first month in the data set that comes close to matching the same month a year earlier. If April and May hold similar numbers, the decline may have found its floor.
For residents, a construction slowdown means fewer new neighbors in the short term, potentially less pressure on roads, parks, and utilities that have been running to keep up with growth.
It also means the city collects less in impact fees and permit revenue, which can slow capital projects, the money that was supposed to pay for the next road widening or the next water main extension. That's the trade-off.
The boom was always going to end.
It was. Every boom does. The real question is whether the city used the revenue from those peak years to build ahead of the demand that was coming. The permit data can tell you how much was built. It can't tell you whether the infrastructure kept up.
The infrastructure plan can.
And that is a story for another day.
Read the full analysis with all 8 charts at thepalmbayer.com.
This is the Palm Bear.